Hello, I'm Juliette Sarli. In this week's edition of IG Macro Intelligence, we take a deep dive into Wisetech. The Australian Securities and Investments Commission has launched an inquiry into Wisetech Global following a boardroom clash over whether a review into the behaviour of the company's founder, Richard White, should be made public. 4 independent directors resigned over the dispute, and the corporate regulator says it's very interested in whether Wisetech has broken the Corporations Act after White was reappointed executive chair of the logistics software company. White will oversee succession planning, including finding a permanent CEO of the company, telling investors on an earnings call that he is fully engaged and that Wisetech is a globally successful product-led company with over 30 years of experience. Wisetech shares have dropped more than 25% in the past 6 months as news broke of an internal review into White's actions. In December, White told investors he had personally sold nearly 3.6 million shares from October to December 20, netting more than $200 million. However, shares did spike higher amid confirmation of White's return after a dramatic 20% drop in one day, sparked by the resignations of the company directors.
Investors, it seems, are saying, well, that's not such a bad thing. Richard White built this business. He grew this business. He's the power at the company. We want him inside the tent rather than outside the tent.
Analysts remain fairly bullish on Wisetech in the wake of its recent slump. ASX TradeWatch data showing the stock is in a downtrend, though, over both long and short-term horizons. The average recommendation on the stock, though, a buy according to Refinitiv, with a price target of just under $120, suggesting it can rally a further 32% from where it is now. Macquarie analysts most bullish, with a price target of $152.70, suggesting that Wisetech can pop close to a further 70%. The analysts warn Richard White's transition to global executive chairman does reinvigorate discussions on risk and governance. However, they also note it reinforces his commitment to the company he founded, which is a common thought from other analysts.
The positive and the negative from founder-led businesses is that you are backing them. We've seen Flight Centre, Computershare, Mineral Resources, Servcorp, Channel 9, PBL, News Corp. You're backing the founder, and you can kick the founder out as CEO. They're still major shareholder. They still control. It is their company. So let's not pretend corporate governance. You're not going to walk into a board meeting with Rupert Murdoch and tell him he's wrong. You
can try.
You could try. So as a shareholder,
I think your son tried that.
I think his son tried that. So you need to understand, if you're a shareholder investing in these businesses, it is their business. It won't always pass the pub test in terms of board decisions. They may be legal, may not pass the pub test.
Are seeing our investors gravitate more toward Wisetech, which has been quite interesting as well. I think it is an indication of never mix business and pleasure, but investors seem to be more following what the business is doing and putting the scandal a bit to the back of their minds, which is always interesting to see, particularly when you do compare it to other companies, which really do ride the waves of what their CEOs are doing.
Well, Wisetech posted a 38% rise in first half profit and increased its dividend, but it's also warned that full-year revenue will fall at the bottom end of its guidance due to further delays in the rollout of 3 of its key products. It therefore is seeing a little bit of revenue guidance between $792 to $858 million US dollars, up between 16 to 26% from full year 24. Citing uncertainty around future economic and industrial production growth, along with geopolitical risk, which may reduce assumed growth rates.
I would be careful about jumping in. I'd also quickly point out that this is a really expensive stock. This is not in bargain territory. You're not weighing up a cheap price and problems inside the boardroom. This is one of the most expensive stocks on the market, and you've got problems inside the boardroom. So the decision to buy is a difficult one.
And that is your IG Macro Intelligence for this week. We'll see you next week.